So, well, we are back on the plenary session 7, which we're talking about the analytical study of corporate performance, domestic and global information, key to well-informed investors' decision. We're going to have two speakers now joining us. First one, of course, 30 minutes, and then the next one, 30 minutes. First, we have an experienced sales professional who uses a strategic lens to analyze the market potential, of course, the plan, go-to-market strategies, organize and train sales teams and plan activities to drive revenue and win market share. He has managed large and strategic accounts, led business development initiatives, and set up new businesses, building winning teams and mentored accomplished professionals. Ladies and gentlemen, with a warm round of applause, let's call upon the MD and CEO of NSE Cogenesis, Aniruddha Chatterjee. I think a mightier round of applause after the refueled energy. Thank you so much. Mr. Chatterjee, over to you.
Thank you. All right, I'm sure that all of you guys must be very tired seeing through all the presentations, so I'm going to keep it very short and crisp. I'm, from the introductions, as you know, I'm a sales person, I'm a sales professional, and I don't know anything about corporate performance. So if anyone is expecting to learn some magic, how to analyze a company and then do some meaningful investments, then I think you are really going to get disappointed about that, right? So what I'm going to do today is that I'm going to use a framework of corporate performance to argue that why having informations and particularly informations about various other things, not only about the corporate performance, is relevant and useful, and that information cannot be only focused on a particular geography or domestic corridors. It should be a global informations that need to be blended along with the domestic informations to analyze and get more insights about what is likely to happen. So with that, I'm going to just kind of begin my presentation. Down, okay, thank you. All right, so I think I have some numbers, it's a very busy slides here. We have taken these numbers from the recent performance of NSE 500 companies for the merit of resemblance. What we have done is that we have taken off all the finance companies out of this particular panel, and we are focusing only on the non-finance companies. Now, if you look at the year-on-year performance of the non-finance companies and also the sequential performance of the same set of companies, there are few things that come to the fore. And so one, if you look at the recent performance year-on-year basis, of course, there has been a dip in the sales performance of these companies. We also observe from the data the input cost for the same set of companies have significantly gone up. It's gone up almost jump about 10% on a year-on-year basis. Now, these two things, one is a muted sales performance and a heightened input cost, has eaten into the operating profit of the companies, and therefore we have seen there's a kind of a decline in the operating profit and PAT margin as well in the range of about 2%, right? And we see the similar kind of a picture when we are also looking at the sequential performance of the companies. This is a very simplistic way of looking at these particular companies. Now, if we take this data and put it into a framework, there are a few things that comes up, right? The first thing that we are trying to understand is there's a subdued performance. Now, there could be multiple reasons for the subdued performance. It could be consumption. It could be lower than expected spending from the government. It could be structural. There are multiple things, right? So what it warrants that if I'm trying to understand why the sales performance have been subdued for these set of companies, I need to really dig more and try and understand the consumption pattern of the industry or the related industries attached to this particular company. The second thing, where we will kind of go and delve a little more, is on the input side or on the expenditure side, right? So there are a few things which are very, very clear. One, there is an inflationary pressure that is pushing this entire input cost up for the company. And then there are multiple other factors which is kind of adding fuel into this particular trend. It could be factors like currency volatility. It could be factors which is more linked to the geopolitics, which is under play right now, and that is disrupting the supply chain networks of different companies, and that is again adding up to the entire inflationary pressure. And I think there are a couple of ways we will see that how we can keep a tab on these inflationary pressures by looking at the some of the relevant triggers or drivers of this inflationary trend. And of course, the other thing that we are also looked at is the cost of finance. The data that we don't have on the first slide is the borrowing of the companies that we have studied, the non-finance companies. We have seen some significant increase in the borrowing. But what is also evident from the data is the cost of finance has gone up, which means that, okay, fine, they're actually paying more interest rate than they used to pay earlier, right? And what we do at Cogensis is that we also kind of create a framework for people to monitor these kind of critical trends, and we also provide them certain other tools so that they can try and understand, okay, what is likely to happen. So in the next set of slides, I'll just kind of take you through that how we are approaching a kind of a logical framework for anyone to first understand what is on the surface, and then maybe try and dig more into the surface and try and understand what is actually happening beneath the surface, and also then take a little more distance understanding about or gazing through a particular crystal ball to understand what likely to happen going forward, maybe like 3 months, 6 months forward line. So the first is, let's try and understand some of the current trends. And I think the first thing that we are looking at is to validate that the inflationary pressure. So I think we have a fantastic database. The database sometimes captures a long historical data which can go back like 50, 60 years. That allows you to kind of go and look at some kind of structural shift in the trends. So what you see on the screen is the high level inflation numbers in terms of consumer price index for the Americas, for the Eurozone, as well as the UK. And all of them show a kind of a similar trend, because the inflationary pressure that we have seen recently is unprecedented, right? I mean, if you look at what we are looking at is almost like 5 decades of the trend, and in the 5 decades, this is really unprecedented, though it has gone down from the height that we have seen in 2021 and 2022, but still it is quite elevated from an overall average trend point of view. The second data point that we are looking at is what's happening with crude. Because many a times when we talk about inflation, and we also talk about the imported inflation, because we know that we are a energy deficient country, so we have to import energy. So crude price goes up. You all know that everything goes up, including the inflationary pressure as well. And there's significant shift happening in the crude price as well. Of course, we have far below that 125 mark that we have seen post-COVID, but still 75 is quite an elevated number if you look at a long-term average of the crude prices. Then we are looking at what's happening to our currency. I think a year back, and I would say not so distant time, maybe like last year around, I would say 20 February or March 2024, many of us believed that the US economy is going to nosedive, because we were talking about soft landing of the US economy, and what would eventually happen if there is a soft landing of the US economy happens. The US dollar is going to crash, and if the US dollar crashes, then of course we were looking at appreciation of rupee. So many of us actually pegged or hedged rupee at that point in level at 82 and hoping that it might still go down from that particular level. What we have seen is just the opposite of what we were thinking back then. From that level of 82, it has really gone up significantly, and now we are looking at a level of almost 86. The next one is simple, the opposite of rupee, which is the US dollar index. So as we see some kind of depreciation happening in rupee, in the similar way, we have also seen a strengthening happening of the US dollar, or rather the dollar index, which is pegged to a basket of different currencies. So from a level of 100, it has really now gone up to about 109, right? Now, interestingly, there are a few other things happening, and that is particularly on the interest rate cycle. Now, this chart that you see on the screen, that basically gives you how the entire yield curve has shifted in the last 3 years or 5 years. Now, 5 years back, which is the line in the middle, the red color line, we used to think that we still have a very, very steep interest rate, right? And we were very happy 3 years back because interest rate really collapsed, right? And now if you see the shift that has actually happened from the last 3 years, there is a complete, inversion of the yield curve that has taken place. And what we are seeing is a significant steepening of the yield in the short term. So almost the yield curve, the yellow line, if you can follow on the screen, is straight line. So which means that from the interest rate that we pay right now for 1 year and the interest rate that we pay for a 10 year or for 20 years or 40 years, there's hardly any difference in the particular interest rate numbers. Now, that's not only in the, the long-term trends that we are looking at, but in the same period, if you also try and look within the short-term interest rate, we also find a similar kind of trends happening. So these are the trends which is actually we have seen in the commercial paper area as well. So, from all of these particular data, what we are trying to, and we can keep on looking at other numbers because this is, again, we are trying to understand what is the spread between our yield curve and the US yield curve, and what used to be the spread 3 years back, and what is the yield spread right now. And again, you will find that particularly for the 10 years paper, the yield curve distribution is quite tilted towards the outer side of the median, right? Now, so this basically gives you a sense that there's a significant shift happening in our economy, and not only our domestic economy, but global economy as well. And this obviously going to have an impact on the corporates which are dealing in this international space. Now, the next question that we would ask ourselves is, what is likely to happen going forward, right? And there are multiple ways of answering those particular questions. Now, I think more than often we think that the market has the answer because the traders, they always understand what is likely to happen in the market, and when you look at the rates in the market, then that has already discounted those particular event for the future. I mean, not for a distant future, at least for 3 to 6 months time frame. So, our terminal also provides this kind of a utility to our users so that they can use some of the market data to understand what is actually happening. Now, for example, if I'm trying to understand that, okay, crude, which is at an elevated level of 75, but what is the outlook, or what is the market sentiment on crude for, for a period of like December 2025? So down the line, after 12 months, are people expecting the crude price to kind of go through the roof again or collapse? So interestingly, the traders believe that there's not going to be much of a shift in the crude oil prices, and therefore this is trading at par. That means people believe that the crude oil price, may not move significantly, but still going to be at the similar level even down the line after 12 months. Same way, we saw the previous slide, and we also looked at the historical trend between our 10-year curve and the US 10-year curve. Now, there are futures, interest rate futures, which are traded in the US. We typically call it Fed futures. And if you also want to go and look at a similar way, that if traders are now trading on that interest future rate today, how they're trading it, what is the sentiment that they have right now? And it seems that people believe that there's going to be a significant discounting likely to happen going forward. That means it's indicating a kind of a red card. While the Fed in their communications right now is very, very cautious in terms of any possibility of rate cut, because they think the US economy is still quite hot, and there is inflationary pressure that still exists in the economy. So therefore, it is likely that they would not consider any further rate cut. But still, it is interesting to see the market actually discount all these factors and believe that there's going to be a rate cut, and that could be all because of the optimism around Trump and his policies going forward. Similarly, I think there are other ways of looking at that what people think about the US economy and therefore the strength of the dollar. And this also kind of looks at a similar way that people are, the dollar of course is trading at a discounted rate. So while the stories coming up from the global press is quite optimistic about the US economy health, but somehow traders are not so optimistic, so they are cautious, and largely because of the inflationary pressure that is likely to come, because all the trade and the tariff related policies, and they think that, okay, fine, that can actually create some kind of imbalance in the economy, and the economy can weaken, and therefore can also drag the currencies down. And that, I think that's what is reflected into the psychology of the traders when we analyze those particular number. Now, I mean, that's one way of looking at it, right? But what we do, because we have a benefit of having a lot of information at our disposal. So we also see, okay, fine, is there a way that we can collate all this particular information and consume the information systematically, and sometimes use advanced analytics like machine learning enabled tools, etc., to figure out a way that what is likely to happen, right? So, so it's exactly the same thing that we are trying to do here in us as well. So we have done some fantastic collaborations where we consume all the different data which is coming in from multiple sources, whether it is macroeconomic data, whether it is market data, whether it is news sentiment data, and using that particular data, we try and see that what is likely to happen in a particular target from 1 day through 6 months, right? And these are some of these indicators that we already analyze on this particular, on our systems. So this is, I guess, about crude oil futures, but I think the predictions that we are doing right now does suggest that while there might be a downward pressure in the prices in the immediate period, but in the next 3 to 6 months, definitely there is an upward pressure that we see in the crude oil prices. Similarly, when we also look at the USD INR, of course, even after kind of level of depreciation that we have seen, we definitely, I think the model suggests that we are likely to see more depreciation going forward in next 6 months' time. So we are looking at a kind of a range-bound currency between 86.57 to about 86.87. So certainly, at least the model does not suggest there is going to be any respite in terms of the currency appreciation. Now that might be good or bad news for companies. And a similar thing, we are also getting a sense by looking at the forecast of the US dollar. And again, it is not really going down, so it is already at a level of over 109, and we think it's going to be range bound between 109 and 110. So, I think the point that I'm trying to make right now is that this is how we are trying to analyze and approach the performance of a particular corporate performance by putting an analytical framework in front of us. We can look at the financial performance of the companies, but I think the approach that we have taken is essentially, can we allow people to now segregate those different aspects of the corporate financial performance and then go deep down into this particular area and figure out what is happening so that they can segregate the trends, and they can also then further look at other informations to figure out, okay, is the trend likely to reverse, or there is more pressure that the corporate will have to go and deal with. Now, these informations can be utilized in multiple ways. I mean, if I'm a corporate today, and if I'm at the receiving end of any of these challenges, whether it is inflation or interest rate, because I might be raising money from the market, then I would use these informations in a different way. Or if I'm an exporter or importer, have significant exposure to currency volatility, then I would also use these information in a different way. But if I'm an investor and trying to kind of look at a particular company and trying to figure out whether this company is investment worthy or not, then besides the fundamental data, we strongly believe this is a framework that can be used to even understand that going forward whether the fundamentals of the companies are going to remain strong, or there are challenges the company will have to face. And of course then subsequently we'll know what are the steps the companies are taking in terms of dealing with those particular questions, right? And many a times when we analyze stuff like analyst comments or analyst reports or communications transcripts, or any kind of communications presentations happen from the company side, we see people are asking these kind of questions, and we also kind of expect the company management to provide some kind of reasonable answer to those questions. So that's the kind of limited data I wanted to present in front of you. I guess the idea was to kind of present that in about 15-20 minutes time. I've taken a little more time than that, but happy to take questions if there are any. All right. Thank you very much.
So, ladies and gentlemen, firstly, a bigger round of applause for Mr. Chatterjee for joining us and sharing his knowledge on the platform. Of course, if I could request the team of N-Cube Collaboration, ladies, if you can please join us and help us in the felicitation of our speaker. So, can we have the both of you to please join us on stage? Mr. Chatterjee, thank you so much for giving us your valuable time, and we thought what better than having two of our leadership to join us who have been behind curating this event. So let's get the three of you in one frame, and let's have a bigger round of applause for all of them being present.